All righty. Good morning. Welcome to the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding. I'm your host, Harvey Freed. Got a nice hour set up for you here. We got Becky Alley on. Good morning, Becky.
Hey, what's up? Happy first day of spring, everybody.
Oh, that's right, Becky. Way to start us off. That's right, our first show of the spring of 2021. And of course, we bring in Chris Deighton. Hey, Chris, good morning. What's happening?
Hey, man. How are you doing? Good to be back.
Fantastic.
Happy spring, everybody.
All right. Hey, Chris with
it.
EXP Realty. Yeah, happy spring for sure. You know, Becky, I'll tell you, home buying season, as we always talk about, it never stopped. It's been going on. And I would say for the last 2 years, there's no break and of course, the sun's been shining here. Becky, you've got to be prepared for homeownership. I know you and Chris want to dive right in and really get into what it takes to get a house in today's competitive market.
Yeah, for sure. I mean, it's no secret, and we've been talking about it, but it still is such a valid point that right now, the lack of inventory is telling the story for the home buying season right now. We've literally just been on a rapid fire. There's been no stop in people buying homes, but there has been some frustration for buyers. So I want to kick it over to Chris to kind of get his take on what he's experiencing. Obviously, like Chris, he's like my Yoda when it comes to certain things. I love picking his brain on stuff. So I'm always excited to hear what he has to say.
Well, hey, guys. Good morning. And thanks for having me on the show.
Chris,
I don't know. We lost you.
Oh, we lost you, Chris.
Oh,
Let's
no.
get that
Can you hear
audio
me?
back up. Okay, Chris is, we just got a little temporary delay. We'll get Chris Dayton. We'll go back
I'm
to that. Hey,
back.
Becky, you and I can talk about what's going on in the refinance activity in February. It definitely was gangbusters again, as March is still showing early March that people have definitely got a little fear in their, the rate increase motivated some families to get off and definitely start calling their mortgage lender. We want you to call Capital Mortgage Funding at 1-800-LOW-RATE, the best mortgage banker. Hey, Becky, you know what's really cool? It's what's back in vogue is amortization charts. Good discussions with real mortgage bankers.
Yes, that is definitely true. I mean, so obviously we preach like you're either going to, it's hard to time the low. You can never get the low of the market or the interest rate, but some people did. And obviously now we're at that point where we're seeing that 0.5 point increase since the lowest of the lows, but it's all good. It still makes sense. But what Harvey's talking about is now it's that time where you got to get out that amortization schedule, and we got to really figure out, does it make sense to refinance from a 30 to a 20 to a 15? And that's what we love really discussing. I find joy when I'm saying, hey, you're going to save $200 a month and let's just say $30,000 over the life loan, depending on what you're going to do and how high that rate is.
Becky, how do we get the society out there? Look, there's commercials on TV. They drive it. We put commercials out there. We want people to call us. But how do we get away from where some of the lenders out there are trying to dummy down the society and dummy down the buyers, where they're only talking about interest rate and not even the closing costs, because a lot of them are trying to pull the wool over a lot of the families out there and offer these low interest rates. But again, low interest rate doesn't always mean you're getting the best deal, because you might be paying to get that rate. And Becky, the average amount of time a family keeps a mortgage, even a family in today's market that might go ahead and purchase their first house, they're going to keep that mortgage for an average of 4.5 years. They don't want to pay a whole bunch of points and additional fees. They still have to get rid of PMI and other things. So I guess I'm asking you, how do we get society and everyone out there just to understand that there's a lot more to this? And how do we get them educated and bring them up to speed?
First you got to start off with, working with people that you trust. And sometimes even your family members, they are your, I don't want to say your own worst enemy, but no one's going to tell you that they paid $4,000 to get 2.375. They're not going to tell you that. They're just going to say, hey, I just refinanced and I got 2.375. No one's bragging about the amount of money that they paid to get those low interest rates. So there's a lot of miscommunication there when someone is bragging about what a low rate they got, but they're holding back the amount of money that they actually paid to get that rate. So, I'm a huge advocate. So is Harvey, about kind of punching in the face with the truth. And if something's not real, or if I'm saying, hey, you're going to have to pay points for that rate, it's a reality. And I guarantee that if you were to ask your cousin's brother, sister's mother, hey, what were your closing costs? The closing costs are going to be a little bit higher. So to the point that Harvey was making, if you were thinking about maybe, selling in 5 years or whatever have you, you need to make sure that you're running those numbers. And does it make sense to pay points for that lower rate? If you're planning on staying, yes, do it. We can run the numbers and we can figure out when your payback is. But if you're thinking about selling, my answer would be, we need to really think about really what you're trying to do. And I would say do the no point option.
Yeah, lots of intangibles on a home purchase too. Are you putting down 3%, 5, 10, 15, or 20% down? That also plays a huge factor in how your mortgage should be set up for your future. And again, where you can save money in the future. If you don't have 20% down, there's a possibility you might want to look at the lender paid PMI program. Higher interest rate, no PMI, nice little tax deduction. So lots of things you can learn if you really want to learn and how to save money on a mortgage. Again, we always say, get the great advice, get some knowledge behind you. It's just not calling around strangers across the country to hear who offers the lowest interest rate. If that's the only questions you're asking, interest rate, you're going to be up for a little bit of information that you're missing out on. And again, I think a big surprise when the next mortgage guy says, hey, why did you do this? Or why did you spend so much money? And why are you chasing this low interest rate when interest rates, Becky, are already at all-time lows? These rates are phenomenal. And Becky, we're looking at rates that were really this last year. At this time last year, this is where the mortgage rates were. And we were saying these are 50-year lows.
Yes, absolutely. I mean, in 2018, the lowest rate you could get at one point in time was 4.875. Okay, we are not even close to that. We are much below that bar. So that is just putting that in perspective. It still makes sense. And nothing irks me more than when you're quoting someone something and then they go online and they're like, oh, well, this person's offered me this and that and the other thing. So sometimes you get what you pay for. And when someone says verbally, your rate's going to be XYZ, I always tell you, get a quote, because I guarantee you that what the numbers are going to show and what the closing costs are going to show are going to be much different. And I'll go up to bat with anyone all day long. All day long. Love it. Bring it to me. I'll beat it. Like, let's just get it done, because I'd rather you stay local, stay with us, anyone local really, versus you can talk to anyone on a headset, but sometimes they don't have your best interest at heart.
Chris Deighton from EXP Realty is back on the line with us. I know, Chris, some audio and some technical difficulties. Welcome to the pandemic still, right? It's all part of what we do. All right. Hey, Chris, slightly higher rates have no effect on today's fierce competition for these new homes. There's no shortage of buyers out there, and a little bump in interest rates not going to scare anyone away, is it?
Making a big difference in the pressure, so to speak. It's the pressure that's happening of the fear of missing out. So when it starts ticking back up, people are like, oh my God, this is the end. I have to get in right now, which is creating more demand. It's nuts. It's nuts.
Hey, Becky, gas was $2 a gallon there for a short sneeze, a couple months in the last year. And hey, people are
when no one was driving.
Right. Hey, people are driving again. Hey, I picked up at Costco yesterday, $2.49, but I mean up to $2.99 at the pumps. Doesn't stop people. I mean, that's a pretty big increase, right? When you go from $2 almost to $3. So again, it's not going to stop people from driving either.
I like that point. FOMO. It's the fear of missing out does drive a lot of. And now suddenly the people that were waiting for the rates to go down to zero, now they're the ones who are calling because they're in a panic to get into that refinance. And same with the people that were, on the fence about, do I want to get pre-approved? Now they're hurry up calling because they want to go see all these houses. The good news is that I do think we're seeing more inventory start popping up. And obviously Chris can attest to this, to kind of ease that pressure. But I mean, for every one house, you have literally 30 buyers, in some of these situations, depending on the quality of the home.
We're going to be talking about it all hour long here. Again, give us a phone call, 248-539-9797. It is the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding. You can reach us at 1-800-LOW-RATE, the best mortgage banker. When we come back, we'll talk about you getting that offer accepted. You want to sell your house? We got some strategies. Talk to you soon.
Hi, Harry Glanz and Dan Burke from Capital Mortgage Funding. Over 30 years in the mortgage banking industry, hundreds of thousands of families served. Let us serve you. Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.
powered by Fairway Independent Mortgage Corporation, NMLS 2289, equal housing lender. Hey, you can catch us at Capital 1-800-LOW-RATE, the best mortgage banker. Again, powered by Fairway Independent Mortgage Corporation. What does that mean to you guys? Well, we're one of the top lenders in the United States. How does that sound? I know we're like that huge company that no one knows about. So definitely.
What I like about us is that we are nationwide, right?
Huge.
So we're nationwide, but we're local. So you don't feel that pressure of we are too big for our britches. Like, so you're going to get that phone call from me at 9:00 at night, from Harvey at 10:00 at night, but we can do mortgages nationwide, all 50 states. So that's kind of what it is. So I actually pride ourselves in the fact that we are so big, but you don't feel that we're so big. You don't get lost. Like, you're going to talk to me, you're going to talk to Harvey from A to Z. So
I love that. And they can still meet with us too, Becky. And I'm glad you cleared that up, because definitely give us a phone call. We love sitting down and breaking it down, whether we want to do a Zoom cast, a FaceTime call in the evenings. Had some tremendous success with a lot of clients lately doing this type of communication. They are getting knowledgeable about their home purchase. Chris, we always talk about the knowledge, how important it is. Buyers flooding the marketplace. Some of them know what they're doing. Some of them are getting, brand new advice, which might not be so good for them because they're dealing with a lot of brand new people in the industry. But there's no doubt out there, any way you can get a door open to get an offer accepted, Chris, this is what it's come down to lately.
Well, it's getting pretty creative out there right now. And there's some tricks and trades, because one of the things that happens is when you get crazy offers coming in, people initially just want to take the price up. And we still have issues of appraisal. You're not going to be able to get around that, because the banks don't get crazy. Consumers get crazy. And we're never going to see what happened in 2008 ever again. It's just not going to happen with the recklessness. And what people need to do now is, in any negotiation, you have to figure out what both sides of the coin want. The seller wants to sell the home. Maybe they want to sell it for the most amount of price. They definitely want to sell it for the most amount of price, but they also need to know where they're going. And there's a lot of other factors that go into it. Most importantly, they want to close. They want to close.
They want to close and move on with their life.
They need to put their negotiation plan together to accommodate what the seller is trying to accomplish. And having an agent who can actually find out what that is goes a long way. Then, of course, being equipped with great pre-approval, knowing you can close, having those tools in your bag, that's going to make the process a lot easier.
Hey, Becky, the indications are the competition is real. This isn't made up stuff. 36% of the sales in February were over asking price. More than 36% of the sales were over asking price. You better have some extra money too.
yeah, for sure. I mean, and that starts with a bona fide pre-approval. And we talk about it all the time. It's like fundamentals in basketball, layups, free throws, right? When it comes to buying a home, you have to get pre-approved. The days of, I want to see the house first without you pulling my credit, it's not happening. No one's going to even let you even in the door anymore, because you literally have to go to a home ready to pull the trigger. And you know what Chris mentioned is you have to get creative, but creative doesn't mean I'm just going to throw $30,000 at a house, right? You have to be smart about it. And working with someone that's an advocate of you, that's going to be able to reach out to that listing side and really have an honest conversation with the listing agent to see what are the seller's wants and needs, and then align yourself up with a lender that, you know, for example, I had first-time home buyers, they were getting beat up. The real estate agent and I, we got together, we figured out what is going to be the best way to set them apart. And to be honest with you, the biggest tilting factor after I spoke with the listing agent was just them hearing my voice. I sent an email as soon as the offer was sent. She called me right away. I spoke with her. I was very transparent. I was very honest. And she called me the next day and said, you know what? You were the deciding factor, because they weren't the best. They weren't the top, but communication is key. And sometimes, you know, if you're dealing with good professionals, they can weed through all the crap, right? And it just comes down to the basic fundamentals of who's going to answer their phone and who isn't, because who cares what you're pre-approved for? It's about closing.
Chris, that's what makes Michigan sort of different than other places in the country. Is we're that blue collar type thing, and you know the listing agents want to reach out and they want that phone answered by the lender. They don't want to call another state 1-800 number and deal with Joe Schmo. They can even tell by the NMLS numbers that the people are brand new, that they're just calling a call shop. We used to call them headset phone jockeys or something weird like that. But the truth is, they do have a headset on, and they might be brand new to the business, and they might not answer their phone. at 7, 8 o'clock at night. They're not there. They're not there.
Yeah, and you know what? You've got massive problems with inventory right now. And when you get in a situation where you need to talk to the lender, you need to talk to pull the list this morning. There are 47 houses for sale in Livonia.
That's
47. 100,000 people live there, and there are 47 options for you to purchase right now. That's it. That's crazy. So when one comes on the market, you better be on your game and have that lender ready to go right now.
You guys, you talked about a little bit about the bubble in there, that talk of the bubble. The dynamics in today's marketplace are completely different than 2006. And in 2006, we were looking at an inventory of over almost 12 months of homes on the marketplace.
Yeah, it was a buyer's market.
Total buyer's market. Anything over, again, Becky, great way to say it. Anything over 6 months, definitely a buyer's market. Under 6 months, more of a seller's market. Today, Chris, that number is something under a 2-month supply. You just said the numbers. We heard it in Livingston County, in the Howell area. Boy, I'm going to go to church tomorrow also and do some extra praying for my clients. Something like all of Livingston County has like 46 houses for sale. So we've got to do what it takes, and some extra prayer in there. We might do that also.
Hey,
I mean, it's supply and demand.
The big guy upstairs can make it happen.
Go ahead, Chris.
Yeah. I said, hey, pull out all the stops. The big guy upstairs can help make it happen. Sometimes when you just gotta pray, just pray. It works.
Okay, I'm good with that.
It does.
Becky, supply and demand, right? It's
so like what you're saying is like what happened in 2006 to 8. It's a totally different scenario, right? All of those things have been put in place with underwriting, appraisals to avoid something like that catastrophic ever happening again. And there is a supply and demand right now. And there is a lack of supply to meet the demand right now. So even with the houses coming in a little bit over asking, these appraisers are going to come in there and they have to really, it's not about what you're offering. It's going to be what the data shows. And appraisers are selected at random. The lender has no control over it. They are going to be local appraisals. But you're going to see that point where they're not going to catch up a little bit. I've personally been a little bit fortunate, knock on wood, where the appraisals have been there, but you are going to meet that, we are going to meet our maker as far as, these going up and up and up, and it's just not going to happen.
There you go. The median price here and across the country, $336,200. The prices continue to go up. Straight up Detroit, Michigan, average sales price went up 16.6%. Now the average sales price in the city of Detroit, $151,200. Miami was up 18%. Again, we were at 16.6, not bad. LA was up 17%. We're not too bad. Not too bad in numbers. Detroit is still very affordable. But Chris, Deighton, no doubt that the whole metro Detroit area and the whole state of Michigan is a very affordable state. Again, we're working hard. We get pretty good income here in Michigan, and homes are priced still pretty generous. You can still pick up a nice place. We're not San Francisco.
Yeah, thank God we're not San Francisco, because that would be really rough. But yeah, as long as people keep their jobs, we keep a good, strong economy in the area and keep focused on doing what we do, which is roll up our sleeves. We're Detroiters. There's lots of good agents, guys. And, you've had them on the show, guys like Joe Muck and Kyle Lang. I'm a fan of Michelle Sayward. All these people know how to get deals done. That's why your realtor really does matter. No matter, even though the fact of the matter is it's not that hard to get into real estate, it is really hard to become really good. And those people are really good.
Yeah, I like that. The Harco Mortgage Show, the show that empowers the homeowner or future homeowners. Do you know that the U.S. typical person right now renting, they're paying over $1,700 a month just to be a renter? So again, reach out to Capital Mortgage Funding or whoever your preferred lender is and find out more about it. You got to get qualified. You got to really break it down what your true income is. Everyone's income is different. If you're a commission employee and you've only been on the job for a short period of time, we've got to dive into that a little bit deeper. For any self-employed family out there, what income do you show? And again, Becky, we got some news this week that they're going to extend the tax turn-in date. No more April 15th. You got till, I think, March 17th now. Sit down with your CPA, your financial guy. We'll tell you what you qualify for right when we come back. 248-539-9797.
Hi, Harry Glanz and Danberg from Capital Mortgage Funding. Over 30 years in the mortgage banking industry, hundreds of thousands of families served. Let us serve you. Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.
There it is. That'll wake me up here in Detroit. That sun's shining, and it's March 20th. And I made a oops. I meant to say May 17th. Did I say that wrong? Boy, it sounded so good, and I went ahead and jazzed up the wrong month. All right, you got to turn in that tax return by May 17th now. And my little boo-boo there, all the CPAs were like, my phone's lighting up here. And then Becky is like, I think you said March. Sorry about that.
Yeah, you had
All right,
St. Patrick's Day on your mind.
Well, how about that good news, though? The IRS has given us an extra month here. So if you're thinking about home ownership, you're self-employed, maybe even own a percentage of your family's business, let's take a look at that income. I know you make $200,000-300,000 a year, but what do you show Uncle Sam? What do you show the IRS in your income? We can have to qualify you with a 2-year average. Again, the pandemic has brought out some additional information that your lender is going to need, but you got a little extra month here where you can sit down, Becky, with a real professional, because debt to income ratio is everything.
Yeah. So self-employed buyers, I mean, we could literally have a whole entire show dedicated to self-employed buyers, because the way the income is broke down, a lot of people just don't understand it. So now is the time that if you showed a little bit less money in 19 and you're about to follow your 20s, you need to talk to your mortgage rep so we can figure out what you need to show on paper, because obviously most self-employed, you know, you can make 200,000-300,000, but you can have write-offs, and now all of a sudden you're only showing 30 because that's what you're going to be taxed on. So you need to show money on paper for self-employed in order to buy a house. And we need to have that conversation to make sure that you're in line to, you're in alignment with what you want to afford when you're out there shopping with Chris Deighton for your next home.
Yeah, definitely. In today's competitive marketplace, housing and jobs, Chris, who might need to drive to work? Again, that definitely changed last year when a lot of people were allowed to stay at home and work from home. Those dynamics are definitely going to be changing. We don't know what the future looks like, but it seems as if more and more families are going to be able to stay at home. But who's willing to drive and how far? Well, the highest percentage of like what you want that commute to take. Becky, you drive in, and I think you fall into that 30 to 45 minutes from home to work. 33%, that's the highest, right? People said, look, 33% of them out of 100% said, yeah, 30 to 45 minutes, that's good. I'll drive that amount each way. That's each way too. And then, of course, anything over 60 minutes, that was the smallest. Nobody really wants to do that. That's 12% of the family said, or individuals pooled in this poll said, yeah, sure, I'll go ahead and drive over an hour each way to work. Yeah, that's a little bit too long. I don't want to read a book, Becky, one of those audio books on the way home, maybe catch a half an album or something.
Yeah. I mean, I drive, it's about 30 minutes, but I'm also driving on like Southfield Freeway. So sometimes Southfield Freeway is the devil, but more people living at home or working from home has alleviated some of that devilish traffic that I would come into. But yeah, right, I don't see the 30 minutes is enough for me, 1,000%.
Chris, the landscape did change. Families wanted to, obviously staying at home. The kids were at home. Everyone's getting back to school now. We don't know what the future is going to be. There's this weird strains that come out of the pandemic. More and more families and individuals getting vaccinated. It looks like around the horizon. But again, families like living at home. Like working at home, and they need that space. So we saw some changes and what the wants and needs are of families.
Yeah, I think we are getting close to the end here, where we've got the light at the end of the tunnel. We can see it in the distance, where we're going to be able to get back to some life and some normalcy, and get out there and enjoy. But you are correct. There are a lot of big companies that have decided that they're going to let their workforce work from home. That's a big deal right now. And so it's redefining your home space, where now you want to have that home office. You want to have you're converting things into more family leisure, family memory making time, a game room, a lot of the stuff that we're seeing. So people are either doing a cash out refi because rates are so low and they're going to do the renovations themselves, or they're upgrading their residence to go get the features and benefits that they want in that home. And they're planning on being there for a while. I think that's kind of the interesting part about being quarantined. I know that I'm looking for a home because I actually got coronavirus in November, and I was down for a week. And when you're in bed for a week and you're in quarantine in a house, you start looking around going, I need something different. Man, I'm about to get divorced. I can't take this. And so you either buy a bigger house or you just suffer. And so a lot of people just do what they need to do and move and get a bigger house. But now I'm in the same boat as everybody else. I'm looking for a home and I can't find a home for
Well,
myself.
it doesn't always have to be bigger too. It could be your amenities might need to be changed up a little bit. Maybe you need,
Right.
again, if you couldn't walk, you might need that first floor master bedroom. Hey, Becky, USDA FHA loans, still some unbelievable options. Fairway Independent Mortgage Corporation, Capital Mortgage Funding, where we work. We're only the tops in the country at this, which is pretty cool. If you want to call us at 1-800-LOW-RATE, the best mortgage banker, and find out how you can go zero down USDA. Becky, 3.5% down FHA. These are great ways to buy homes.
Yeah, I mean, you do not need 20% to be a homeowner. That is a stigma out there that will, what do you need? What do you need? You don't need 20% to get rid of PMI either. You can do PMI options and, we can get into all that stuff, but, USDA, if the home fits, or VA, you have to be a veteran, obviously for VA and USDA, the property has to fit. It's either you fit in the square or you don't, right? And 0% down that these programs allow, it doesn't mean zero out of pocket, right? So we still need to make sure that we're within your budget. We still need to make sure that you have, the cost to cover your closing costs and any set prepaids. But these are excellent vehicles to get you where you need to be when a home is in that scenario. And if you need to come up on the purchase price a little bit, that's going to give you that flexibility possibly.
Chris Deighton.
Yeah, I have a quick question. On that, I see a lot of people probably wanting to move to a 15-year. Can you do an FHA 15-year?
Yeah.
Or is that only for conventional?
Becky?
You can absolutely do a 15-year no matter what. I actually think that's kind of like, I kind of take it for granted that, you get a question like, do you guys do 15 years? Do you do 20? I didn't know there was, institutions that don't offer those kinds of rate terms and products. So we can do it all. You can do a 10, 15, 20, 25, 30. We can even modify the terms where if you have 27 years left, we can do 27 years on a refinance. So we can do it all, whether it's a government-backed loan, so FHA, USDA, VA, or a straight conventional mortgage. You can, utilize a 15-year no matter what.
Right. People have to understand all those nuances in these different transactions. And Chris, you throw it out there, 15-year fixed FHA. That does have the MIP that'll drop off, where the 30-year FHA never has the MIP that drops off. There's a reason why a client might need to get an FHA loan. Maybe they had a bankruptcy or a foreclosure that still doesn't really fit those guidelines to go conventional. But Becky, our thing is, especially in today's competitive market, we're trying to convert some borderline clients that are FHA into conventional buyers, minimal down. It's tougher. They have a little bit lower credit score. They don't have a lot of money to work with, but they're trying to get a house in today's market. And as Chris Deighton knows, an FHA loan done with professionals is the same as a conventional loan. But half these agents don't know that. And FHA sounds scary to someone who doesn't have the knowledge. It sounds like it could take longer. It sounds like, well, the appraisal might be a little bit different, but it's not.
Yeah, no, I agree with you. I feel like FHA has a stigma out there that it's like bad, and it's not. I mean, at the end of the day, money is money, and you can be a 700 FICO score buyer, but for whatever the reason is, FHA might suit you. To this point, I had a conversation last night. I have a borderline buyer, can go conventional or FHA. For the reason FHA did suit her needs a little bit better, but the agent called me and said, hey, there's a handrail missing. The sellers are not going to make any adjustments or fix any of these things. So we changed it to a conventional mortgage. I went over the terms and it worked. So, it's a lot of late night conversations to make sure that we are putting you in the right loan program that's going to get you to that finish line. And who you align yourself with matters. Who your agent matters. Who your lender is going to be matters, because you need to work as a one cohesive unit in order to be successful in this market.
I said it earlier in the show. An article came up by Tim Ellis in the Mortgage News Daily, and it talked about 36% of the homes were over asking price. So we talked earlier about having a few extra dollars. That's a question. How much money does it take to buy a house? Down payment, closing costs, setting up your escrow, the homeowner's insurance. Those are the general items. Sometimes there's additional costs in condominiums, association startup fees. They might want 1 or 2 months up front and things of that nature. Pushing the national average median home sales prices. What's going on out there? We don't see any stop in the future as prices continue to climb here in 2021. Again, we're going to be taking your calls in the second half of our show, 248-539-9797. A little March Madness when we come back.
Hi, Harry Glanz and Danberg from Capital Mortgage Funding. Over 30 years in the mortgage banking industry, hundreds of thousands of families served. Let us serve you. Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.
here, right? Sunny and 50 or plus degrees. Springtime here in Michigan, man, it's rocking. We got spring training just about wrapping up. Tiger baseball. In fact, we're going to have them here at 1 o'clock. Right after us, we got Pat Caputo, then Tiger baseball. Mr. Costa joins us, the new fella, and then Red Wing hockey later tonight. Keep it here on 97.1 The Ticket, the best sports station here in America, that's for sure. And we give you 1 hour of the Hardcore Mortgage Real Estate Business Show. Becky Alley from my office, top 1% of all originators. I dig her. And Chris Deighton with EXP Realty. Some great people on the air with us today. And we want to hear from you at 248-539-9797. Always ticket text if you want to jump in. Someone did ticket test, sort of a general question, guys, and I'll throw it out to our little panel. The optimal average somebody should save before moving out. I mean, boy, talk about a real vague question. And this is really, when I read the question, I said, it's not a great question, but it is a great question because what it's saying is people need more information, not less. Becky, people need to know what this mortgage stuff's all about and buying a house, and it all ties in together.
1,000%. And what you need to save is going to be contingent upon what your goals are. What is your price point? What are you trying to accomplish? And that's the conversations that we have to have up front. And part of that starts with, like, I want to kick it over to Chris. You know, I want our listeners to hear, okay, from a listing agent standpoint, right? You got offers coming in. How are you viewing those? Like, what is going to make you stand apart? You know, what are you looking for when you see a buyer's offer coming through?
Yeah, you know, so like I have a listing coming up in Taylor. That's going to be a ranch I was telling you about on the break. And I know that the minute I list it, because it's updated and ready to go, I'm going to have 72 showings in a weekend and about probably 10 to 15 offers on it. And as a listing agent, what I'm going to be doing is putting together, I got to read through all of them. I'm going to put together an Excel spreadsheet. I'm going to have the type of loan that it is. Is it cash, conventional, FHA, VA? I'm going to have what the price is, what time they want to, close, what range of closing rate do they have? Is it fast? Is it not? Are they going to provide occupancy? Yes or no? And I'm going to have all those factors and then weed through. And then I have to spend about 45 minutes walking my client through all the pros and cons. Is there, guarantees in there? Are they bringing cash over appraisal? Are they waiving inspection? All those factors help determine which one's going to get them across the finish line. And that's where, just weeding through the noise, if you will, is really important. But, to answer Harvey's question too, real quick, is that if you want to stay in a house, staying in a house, if you move in right away, obviously you can't turn around and just sell it because there's a cost of selling it and you're going to have negative equity. And but the rates, the way the market's moving up right now, you probably need to stay in a home for a minimum of 1.5 or 2 years to be able to move on from that without having to bring cash to closing. I would say safely, conservatively. Above that, you're fine. You're probably going to be ahead. You're paying down your mortgage. You're going to have an increase in the value of your home, which is going to make it easy for you to be fluid. So that's what I would say. Probably 2 years is the minimum.
All right. Becky,
Yeah, so
go ahead, Becky.
What I want to also ask are, because I've seen some stuff online where, the sellers, right? So now you have people showing your home, but you live at home, right? And how are sellers getting around that where, because obviously is some of the issue the fact that people are having a hard time getting into these homes to truly see them. And then it's just like the select few that got to see it, you got to be the first ones in the door kind of thing.
Yeah, and it is tough. And one of the things as a listing agent, I hope more of my colleagues out there hear me and listen, because we have a lot of frustration that builds over, a buyer agent gets worked up and then carries that into their client. What we need to do a better job of understanding the situation. When you list a home, you have to put we're not going to look at any offers until X period. So if I list a home on Friday, I'm going to allow everyone the opportunity from Friday, Saturday, or Sunday to go in and look at the property and then write an offer. So if you're the first person in and you love it, and you write an offer, you need to know up front, we're not even going to look at it until Sunday. And that's because we can't just pile everyone into the house. The seller has to go somewhere. You can only bring so many people. You can't have overlapping appointments. And so there's, the health risks and the situation that we're still in, still being cautious. I think we're about 3 or 4 months away from being back to kind of normal, but by June, July, somewhere in that range. But for right now, better communication on the front end, especially from the listing agent, will go a long way to keeping people knowing what the process is, knowing them that they're in the loop. It'll be fine. It's going to work out. And then, may the best buyer win.
I like that. Hey, my head's spinning a little bit, but so I'm thinking, okay, so I list my house with a professional like Chris Deighton, and then we say we're going to set up appointments every 15 minutes. So I got 4 showings an hour. And if it's 4 showings and there's 8 hours in a day, is that 32 showings in a day times 2 days? I could do these on Friday and Saturday and then clean it up, and my family can get back in the house on Sunday and they can live their life normally. But that's about 60 showings on the house. That should be ample time for you guys. Not only do you have 60 people in a house, you're going to have 20 offers to look at after that.
Oh, yeah. Absolutely.
So that's what it's like. That's sort of what it is.
It's all in the quality of the house, too.
There you go.
We're giving examples here of a clean, turnkey, ready to go home, and that's going to fly off the shelf. We really need to spend some time talking about new construction and where are all my contractors at? Where's my plumbers, my electricians, and
they're working.
The cost of wood is through the roof. So we're going to have some fun times with all of that.
I actually saw that new construction on average is going to be $25,000 more just because of the wood inflation, and the cost of lumber right now. It's going to be something amazing that we're going to be seeing here with the new construction costs going up because of that.
Yeah, they're having trouble putting a dent in this kind of inventory. In the past, they would definitely be filling in the gap. Somewhere between 10 and 25% of the homes that would hit the marketplace, but they have their own struggles now. Labor used to be the struggle in the past. Guys are back in Michigan working. This is the place to be anyways. So if you're an electrician, a finished carpenter, a carpenter, heating and cooling guy, whatever that might be, your trade might be, plenty of work here in Michigan. Lumber costs really driving material cost. Of course, a little shout out to Architectural Door and Millwork out there in New Hudson, Michigan. Of course, my brother-in-law's place. He is jamming because everyone wants to put these gorgeous custom doors in their house. And again, materials are still a little bit harder to get and the cost has gone up. So again, consult your lumber yard, find out what you can do to make your house a beauty out there. Hey, Becky, it's all about these young people, millennials still making up the largest share of buyers out there. These young, wonderful people. My oldest daughter is going to be one of them soon enough. And they are buying houses. But again, they do things a little bit differently. They're not as touchy and feely. They want to go online. They don't want to talk to people is what I'm being told. Not all of you, not all of them, but definitely maybe a little bit of reaching out to say, hey, you're buying your first house. We just got to educate you on these little basic things and maybe you'll have a little bit more success at it.
Yeah, I mean, I think sometimes it's amazing that the younger generation, like no one really had the conversations about finances, about credit, about what you need to buy a home. I'm really an advocate on that. I'm teaching my children what it's like about finances, because I feel like there was a gap where people did not speak about that. They almost just kind of threw money at their kids. And I'm not talking bad about anyone, but they didn't educate them on the importance of credit and things like that. Yes. So my mom preached about credit to us on a regular basis. So it is important to know that those student loans, if you're not making those payments, it's going to affect your credit. And I feel like, you can text, you can go online and you can make a spreadsheet for the spreadsheet, but sometimes you do need to have that conversation. And don't be afraid to have the hard conversations. The sooner you start talking about your credit, looking at the credit, the more you're going to know that you're in a position to buy sooner than later, because sometimes it might take 6 months.
Chris Deighton, wrap us up here. There's no doubt, though, that generation, they were already used to checking things out online. So when that pandemic hit, they say, hey, no problem. I can check it out. All the beautiful videos that you guys are doing, all the real estate agents are paying top dollar to have the gorgeous videos of the homes and really get a look at the house. Of course, you still want to get in there.
Yeah, of course. And you know what? It's so funny because I think one of the biggest things that Becky just talked about was planning ahead. No, they don't even know the timeline really of buying a house. People think they can just show up and go write an offer. But I would encourage everyone to call a lender, call Becky, call Harvey, have them pull your credit. There might be something on there that they could fix or adjust to put you in a better spot when you get to the place where you're ready to write an offer. It'll strengthen your position, and knowledge is everything. I'm telling you, that's the key to everything. Knowledge is power, and then you get in a good position to buy a home.
Yeah, I like that. Becky, some final thoughts here.
We talked about on the podcast, and I think Chris just hit it again. 3 things you can do this week. Let someone pull your credit. For sure, it starts there. Let's figure out what you can afford. Number 2. And number 3, let's make a savings plan. Let's figure out what do you need to that ticket texter. Once we know what your credit is and what you want to pay, let's figure out what you do need to save to get you into that house. Those are the 3 things you can do this week that'll set you up for success 1,000%.
All righty. We challenge you to find better mortgage people than at Capital Mortgage Funding. 1-800 low rate, the best mortgage banker. Chris Deighton, thanks for joining us. EXP Realty.
Pleasure,
if you want
man.
a top agent, definitely check us out at Capital. We'll point you in the right direction. Pat Caputo coming up with sports. We see him in the bullpen. He's got his 60 pitches. He's ready to go. Keep it here on 97.1 The Ticket. We will see you next Saturday.